Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities PCG Research. Asian stocks mostly gained after an AI-fueled rally in the US. However, US futures dropped after the S&P 500 advanced for a sixth day. Bond yield fell to 3.72% from the levels of 3.80, and the dollar index was at 102 from the levels of 103. Today, it's a big day for US markets. The option expiry event estimated about $4.2 trillion coincides with the quarterly expiration of index futures and the rebalancing benchmark indexes including S&P 500 known as triple witching. Generally, we see greater amount of volatility on this day. So yesterday we saw good amount of sharp rally in the US markets. Most of them closed above their highest point of the day and highest point of last several months. And today, on the day of triple witching, we are going to see further more activity in the market. So I think these 2 days are going to decide the broader trend for the US markets. Again, if we go through with our markets, then after the event of Fed, we saw good amount of profit taking. From the levels of 18,800, we saw the levels of 18,650 during the day. The formation is suggesting us that we are going to see further more profit taking if we see any rebound in the first half. So the strategy should be to look for creating some short positions close to 18,730, 18,740. We can keep stop loss at 18,800 for the same, because above that only we can expect some short covering. And today, in case if we see the market starts trading above the levels of 18,800, then it will be a big positive for the market. So 18,800 should be the stop loss for creating short positions in the market. Again, we can expect 18,600 or maybe 550. Ideal strategy should be to look for creating short at 18,740, and similarly if we see any drop close to 18,580 or 500, then there we need to be buyer, as the overall trend, the broader trend of the market is still bullish. Short-term structure is weak. So we may see the levels of 18,500, 550 on the downside, and we can keep 18,500 as the final stop loss for holding any long positions. And that's the reason buy between 18,580 and 550, keep a stop loss at 18,500. For the bank Nifty, after the long consolidation, we saw final breakdown on the day of weekly expiry. It has not respected to the levels of 43,500. In fact, it closed below the same. So the next level to watch out for would be 43,000 to 42,800. There the bank Nifty is having excellent support, and between those levels we should be buyer. On the higher side, 44,000 and 43,700 are going to act as major hurdles for the bank Nifty. So there you should look for reducing positions, exiting out of loss making positions, or in fact you may even look for creating some short positions with a stop loss at 44,000. For the Nifty IT index, it is completely flat. It is in the range 29,000, 28,000, 28,300 is the support zone for it, and we are going to see stock specific activity in the Nifty IT or from the Nifty IT basket. In that we like HCL Technologies, which closed slightly higher above its previous high, and the overall formation is suggesting us that we are going to see further more activity in the near term. Apart from this indices, metals should do well, because most of them are finding support whenever there is a correction in the market. So broadly, we are of the view that we need to be a little bit careful if there is any rebound in the market first half, and short covering will happen only if it crosses 18,800. That's all from my side. Thank you so much for listening me. Have a great day to all of you.